Okay, so today we will continue with the module 3. We have to finish up, as I mentioned to you before, like few things which will equip you to handle the projects, you know, in a professional way, and would also let you know what is the standard practices for doing costing and pricing your projects. So I have this slide open in front of me, and this is where I will start my lecture today. And the rest will follow with a combination of some of the things I will go through in the book. So for now, let's look at this slide to assess, you know, the just to get an idea of what could be the cost of the project or how do you evaluate the cost. This is very important because once you make a commitment and you enter into a contract, usually on research projects, you have to sign some sort of commitment through a legal document. And in order for you to do that, you should know few of the complexities of the project to understand the cost that it's going to be for you to assess and to evaluate like how much of the money you can charge on top of the cost. So to begin with, you need to calculate your bare minimum cost. I would say that there is a mathematical computation, which is where we are going to look it up in detail. Um, but cost is the starting point, of course, and then on top of the cost, you're going to add your profit margins. And usually the bulk of the cost in research project is coming from the human resource, which is your cost of working on hourly basis, and then an additional cost of acquiring the data, or where certain type of extraordinary effort is required to actually go look for that information. That's when you will have to add that cost and build it into your pricing. So I mean, there is more complex formulas out there for research project calculations, but the easiest one or the simplest one that you would work with is directly going to be related to the size of the project. So first you want to check what the size of the project is. So the basic cost calculation you would do is assessing your basic or the minimum hourly rate or the cost to you for doing the work. And then you're going to multiply that with the duration of the projects in number of hours. So that's very simple. So it's based on hourly cost. But then, of course, the ancillary costs and any additional out-of-pocket expenses, you have to negotiate with the client and you have to build it into your proposal where you're going to give them a billing estimate as well as the duration in which you're going to finish the project. The complexity of the research project is where you will need some special skills to assess what could be the complexity. Complexity can be, 10 different things. But for a research project, the ones that we would highlight are listed here, 1 through 9, as you can see. So the first thing is that the scope of the research of your research has to be very clear. It should not be broad or it should not be, um, mm, you know, um, um, explained in very few words. It should be elaborate enough that gives you the opportunity to figure out the uh, elements or the different ways in which you can approach that problem or solve that research issue. So the more information the client brings to you, in the shape of scope of the project, that's where you will find that the clarity will start to surface. And if the clarity is not there, then unless you are a very professional researcher, been in business for a long time, be very difficult to understand the actual or real scope of the project. This type of, because it's a service oriented business, and because you have to work very close with the client, it's not like totally independent research. There is a lot of hand holding required. There is things that would impact the provisions that you will make or build into your cost, like the eventualities of something that may or may not happen. So there is always an area, gray area, where you cannot commit 100% as to what type of information or the nature of information that is accessible to you, or where certain data needs to be bought, or where there is some restriction to the use of that data. And of course, the process of acquiring that data is an additional cost. So from the point of view of understanding of what type of data, what type of information is required, it takes a bit of a knowledge, bit of a um, I guess, systematic approach to do two things. One is not to commit something that you're not sure of. And if it is an ongoing project where things might change or turn up differently, you have to build a special provision in the contract that says that, you know, if and when, or, the wordings that would say that if certain type of problems or impediments to getting your data is going to have a consequence on research and the cost, then you want to leave that space open for negotiations and further discussions. Sometimes out of pocket expenses cannot be predicted. At times, the client is cash strained and therefore wants a fixed cost projects where their budgets would not allow any fluctuation in the cost, especially if it scales, the cost goes up. So for so many different reasons, you have to have that insight into the industry or the nature of research, or something that tells you or gives you an indication where you have to be cautious. And at the time of signing the contract, you have to look at those clauses and make them appear as open for discussion. So anyway, that's just that is something that is related to scope of research. That's where you begin. Then there is the length of the project. There are different cycles of projects. At times, if it is a short-term project, it's a quick research. A quick research meaning, it could be a research that would take about between a month and 3 months. So that is considered short-term. Long-term is something for which you have a commitment, but based on the contract that you negotiate, and understanding that with the time, as the time goes by, there are different cycles in which, or different milestones that you have to cover in a long-term arrangement. And because it is going, the project is going to move with time or longer amount of time, there could be situations where you don't want to get yourself stuck with the fixed project cost. So there are other type of costing methods that you may want to apply in long-term arrangements. Then there is ongoing, which means that you have been with them for some time, they know you, there's research, something that you're familiar with, pertaining to that specific type of business, or the client knows you well enough and knows that you can always jump back on the research project based on when the opening is there and when the time is actually arranged. For instance, in seasonal situations where the product scales or the sales of that product scales, if some company say is manufacturer of warm clothing, so come winter time, you know, there could be the right time for you to uh, to start working with them on that project, so that becomes kind of ongoing. And then there is time strain. Time strain means that there could be a pressure for the management to do or get some information verified or certain facts to be articulated along with the third eye input or outsiders input, and it has to be delivered on the table for, say, interested parties. It could be investors or could be anyone. For that reason, you are time strained. Or there could be a funding issue where the funding, VCs or seed funding or whatever level of funding is offered, they need some reports or some research or something done quickly for, and for the client to make that available, they would ask you to um, do your research in a very short time. Okay. Even though you may not be having those resources available, or there could be a commitment which requires for you to do added arrangements to get that done in as short as possible time, that would add to the cost. And therefore, the one of the issues, depending on at what point or at what type of projects you are involved, the length of the project in terms of number of days, a number of months is of uh, importance for adding the or factoring the complexity. Cost of project and budgets. So cost of the projects means that you're going to have to look at the client to see what is it that they're offering given their financial circumstances. If it is bootstrapped, that means that they're on a very thin budget. Then there is another type of costing or offer or something which would work nicely if you know or have the knowledge to understand that there are type of arrangements where the bootstrapped companies or startups, for examples, you may want to negotiate something called risks and rewards pricing structure. Then fixed pricing is for the fixed budgets or project-based costing. Low budgets you have to look at also, and there are something called cost plus contracts. Now, between low budgets and cost plus contracts, the low budget means that the research might take extra bit of time, meaning that you may want to compromise on a quick delivery by reducing the cost and dragging the project on long-term basis. As and when your resources are available, you can start to uh, continue with the low budget projects. Time is money, so everything is interconnected with time. Then the last thing about cost plus contract. Cost plus means that you negotiate with the client um, terms where you would give them a unit price or a cost per hour price for your services. And on top of that cost, you would say that you will be charging, say, fixed percentage, say 20% on top of, say, $150 an hour, if that is your hourly rate. And by the way, that $150 includes a small bit of profit margin, which is like a cushion that you have to keep. And when we're doing minimum cost that you calculate for yourself for charging client on hourly basis, you are going to build in certain elements of cost that would ensure that if you maintain that basic cost as the lowest offering to the clients, you would never be going, you would never land in any losses unless you have calculated the time factor incorrectly. Your hourly rate will not bring any kind of losses to you. So when we are talk about cost plus contract, we are talking about that specific rate, which has that built-in buffer. And on top of that, you would say to the client that, look, I'm going to charge you 20% on my basic hourly rate, and that would make it a cost plus contract. Additional things that gets added to the cost plus contracts are out-of-pocket expenses, ancillary expenses, related expenses, and those expenses that you have agreed with the client prior. And sometimes the client would put um, a threshold of the maximized cost that you can incur in certain area of cost, or certain cost nodes um, would have the limitation to it. So there is all sorts of structures, but cost plus usually you do that when the project is unpredictable, or when the client is also not sure how long will the project last. And third thing is that the client has enough trust in your ability to deliver the project, and you have that understanding where the client knows the quality of your work and therefore is willing to accept that minimum price level, and allow you to add or accept anything on top of that. So all those factors come into play. Cost of the project, therefore, is most important, and budgets of the client, of course, you have to keep that in perspective. The volume of data is in four. The volume of data here, it means that the data, acquiring a data through surveys or getting to the primary or secondary sources is one aspect of the data complexity, or that adds to the data acquisition cost. The second is the volume, which means the numbers are far too many, or if there is unstructured data that is not organized properly, which is available to you or you gathered from somewhere, but requires extraordinary effort to organize that. That is one of the impacts of very high volume of data, which needs organization. So if the volume of data is too much, then that is a factor that you have to consider. And volume could also mean sample sizes. Okay? Or there could be lot many stratas you have to create, or the methodology of sampling would be more complex if the volume is too high, and the rec- uh, um, sample requires recruitment process and so on. So that is the volume of data. Then we've got the data source, primary source directly from the source of information is generally more expensive. Um, and then, secondary data, what is the type of secondary data? Where would you get it easily? Is it easily obtainable? Or there's something which requires for you to do investigations or do uh, deep research? The quality of data, of course, is another thing. So three things: volume of data, data sourcing, quality of data. These three things would definitely impact your costing. Um, the quality, of course, here it is said that it's talking about vetting for data integrity, meaning that data is reliable, in short, like it is kept without getting diluted. It is maintained on regular basis as an updated data. It has a source which is verifiable and so on. So the quality of data. Then we're going to look at the data collection methods. Of course, the method itself on how you're going to obtain the data, would require some effort, and therefore there is definitely a cost involved. The levels of expertise and collaborations. A lot of times, one research business, excuse me, especially small research businesses, they don't have experts or the kind of human resource available on regular basis as employees or as ongoing project resource that is available throughout the year. So, and because research is cyclical, sometimes there are different phases of research. Sometimes you don't require a lot of resources. I'm basically more talking about human resource or expert resource. But there comes a time when you go from solve one problem and go to the next one. You may require some more assistance, some more help. And so it just, works in a cyclical form. Okay. So you have to be prepared with that lot. I've seen even with us, we collaborate with a lot of researchers and experts that we have used in the past, with which we have a good relationship. And then, when the time comes when we need to pull our resources together, we are able to do that only because we have collaboration agreements or at least an understanding for those individuals that would assist us in times when we have to scale our resources. And agreed research methods and methodologies. We've learned so much in there, qualitative, quantitative, this and that, and so on. So nine of these are like straightforward, giving you a concept of how you would evaluate the complexity of research. Complexity here basically means how you're going to do the costing for the project. How would you be able to write a proposal that includes everything that is laid down here in these points, and keep in view that the proposal that we looked at, I think we did that earlier, but I have to revisit that one more time with you. Yeah. Excuse me. So that proposal has everything covered that is said um, in first from 1 through 9, all of these. So the complexity is pretty much something that we like to like to bring to the knowledge of the client, and also for you to design your proposal. Now, next thing that I'd like to do is revisit the proposal again. I think we did a bit of it, which was probably 30%. There was 70% in that document, which would explain how we interact with the client at the time of negotiating the project cost. So I'm going to start with that after we take a short break. Let's make it like 10 minutes. Um, in the meantime, hey, Majdi, you're there?
Yes,
You
yes.
disappeared. Hey, there you go.
Yeah, I'm
I
here. Yeah.
saw,
I
I got
just
a
had
notification.
yeah, I just had a technical
Congratulations, first
problem.
of all. You
Ah,
passed module two, final exam.
yeah, yeah. Thank you.
So you've been going faster than everybody else, it seems like. Yeah,
Actually,
telling
I read.
everyone to bite my dust or bite the dust. If there's
I followed your advice. I actually, what I did first before taking the exam, I took the practical, the mock test. Yeah.
okay.
So yeah, and also by reading, and yeah, that's what I think. Yeah, it went well so
It's
far. So good. Hmm.
it's good that you went through the process, because now you will be able to share it with everybody else,
Of course.
and give some opinions as well as give some advice on
Yeah.
how to, because module 2 is most difficult one out of the four modules. Module 2 is the bulk of the exam. So if you pass that one, then the rest would be much more easier. Um, so yeah, we'll talk about that another time, hopefully, but congratulations anyway. You did
Thank
well.
you. Thank you. Yeah, I would be very happy to share my experience. Yeah.
Good enough. So should we take a 10 minutes now? So we ready? Let's do that.
Sure.
I'll see you shortly, eh?
Thank you. Sure. Yeah.
Thank you. Okay, I have a very interesting question from Majdi. He had sent me an email, which I just picked up. I'm glad he mentioned. I must have missed it before. Um, he was asking about the two results we are getting using A and D versus the one that is without A and D. Okay. Here, market study and market research, the two terms, they are not, um, they are going to yield slightly more number of results because they are exactly not the same. You could see that one is 1,570,000 versus 1,930,000. So the difference is because when you're using A and D, you are basically besides, by the way, when are going to emphasize more on the number of results, you are making one mistake, or you are probably not looking at the factual situation of how the search engine is bringing to your attention a far less number of results. It is not going to take you to 1,930,000 results to begin with. So the thing is that A&D is no longer the operator that is suggested by Google to use anymore. It is telling you, if you look at the number of operators that Google is offering, it is not including A&D. It is just emphasizing on quotation marks. So, not that that is the valid answer, but when the algorithms are going to respond to A and D versus these two terms, they're going to serve the same purpose, except that the number of results would turn up different. And that's because algorithmically A and D does work, but it is working in a way which is not exactly going to bring you the same number of results, because here A and D is an operation that is being used by the textual search internally, but it is also responding to or working with the indexed pages in a slightly different way. So you cannot say that one operator is exactly a replacement of something else. It is always going to bring you a little bit of different results. But the emphasis in both the queries or the objective is the same, which means that those two terms that are on either side of it has to be part of your return results. And similarly, when you put these two without putting A and D, it is also doing exactly the same thing, except that the SERPs that gets returned back to you, you will notice that the pages that are presented to you, in both instances, the terminology will exist, or both terms will exist on the return results when you go to those pages in the snippets. So, did you see that both terms with using A and D and without using A and D would bring results that includes both these terms or not? That is the question.
Yes,
Okay.
clear.
And more often than not, we use A and D for another reason, which is what I've been like talking about when I'm separating certain terms to not attach themselves, or certain words to not attach with themselves with the word next to it. So there could be two words, market study and market research, for instance, but when we use market study and along with it we use the word research, there is a tendency that the word research would add as if it is one long phrase like market study research. So in order for us to separate that and not let the search engine attach it with the terms on either side of it. We may use A and D as a separator to make sure that the terms are treated separate or the words are treated separate and they don't get clumped together or they do not attach themselves as if to add to the phrase or bring a new phrase for the search. So this we use a lot when we have to separate certain terms and prevent them from getting attached, because one long search query would have multiple wordings and multiple ORs and so on. So that is the reason why we use A and D as one of the better solutions, to separate them.
Good, good. It reminds me of the parentheses when we put the parentheses, like to separate,
Yeah,
the.
but parentheses don't work in Google search.
Yeah, that's what you told us.
So this could be the next best solution.
Thanks.
You're welcome. Now I want to show you the proposal or the documentation that is exchanged between the client and you as a research analyst or researcher. Let me bring that slide here. The process of getting the contract signed is not an easy one. You start with, first of all, there is a proposal from the client, and that's where they're going to tell you the scope of what they need to get research done for, and different layers of how you would or what the expectation of the client is. They're going to put that in detail in your request for proposal, which is the first document that will come to you. Now, your objective is to respond to that document in a professional way, because likelihood is that the same request for proposal is going to your competitors as well. So whoever comes back with a well-written proposal in response to the RFP would win the project. Uh, Sometimes price is not as relevant as how you have articulated or understood the scope, and if you were able to make an impression on the client. After you get that sorted out, and there will be a lot of exchanges of information at this point, which is step one and step two, the response as well as the RFP. RFP may be amended, RFP may be more elaborated, or your proposal that you have sent may be open for negotiations. Whatever the outcome of these two documents is, you will eventually end up signing up a research service contract. Okay. Um, I want to show you an example or a sample of research contract, something that you can safely use in North America. It works quite well in USA as well as Canada. So it is well balanced and it is real, meaning that we actually use this document. And you are most welcome to also use it for your purposes, except that we don't we recommend to always go through the attorney or have it reviewed by someone who is legally inclined, understands the contracts. But this research contract has certain layers or certain elements which are essential, or you can consider them to be standard clauses placed inside of the legal contract. Or for contract to become binding, these elements have to be present. So now those are the ones I will point out in research contract. We have a sample, like I said, in the book. Then supposing once this contract is signed between parties, the next thing is that you're going to generate a research report. Now, research report does not have to be conclusive, or it doesn't have to be delivered at the end of the project. There could be different phases of how you can segment the reporting, just so that the client is also looking at something for which the client is already prepared or has agreed to, or understands the direction that your research is taking, so that you are all on board and there is no surprises at the end of the research work where the final report all of a sudden is actually issued. All right. Then, of course, after the report gets issued, you need to build an invoice, or there could be invoices built at regular intervals depending on the billing cycle that you have negotiated with the client. So what happens in that case is that the bill itself has to be written in such a way that it is explaining in details various costs, which is not only part of the contract, but there would be cost that needs to be approved um, as well. And so there is a format which we will disclose to you, typically how we like to bill the client. um, because if the billing is not clear and it is not detailed, and if you are paid in different stages, then you will not go to the next bill. You will always be um, settling the previous bills before the next one comes in, and it shouldn't stop the project. So these are the documents we will talk about. Okay. Hmm. Time goes so fast. Okay, now let's open up these documents in the book. Then we'll do the costing and pricing part also. So let me just get to the specimen documents first, then I will do uh, the other thing. Okay, since I can see the invoice just opened up in front of me, let me just see if I can make it more visible on your side. I'll make it into a single page document. Have a look at this invoice. So if you are using, let's say, any accounting software for research projects, you'll have to fashion it and organize your billing in this format. It is recommended, it's not compulsory, it's just a recommendation. So what happens, okay, we'll just discuss this part first, the first part on the top. Here you can see that the research itself is to be built in different stages, something that is part of the plan and something for which you have already um, had an agreement with the client, like at what stage they will you will issue the bill for the services, because you don't want to be at a total loss giving your physical services to somebody and then later finding out that there is a dispute. It will be a like, total net loss. It's not like any product that can be returned. So it's best to design your research work in different stages and get the billing done as soon as you finish up that phase, and get the payment right away before you move to the next one. This is a safer approach. So on the top, you could see that These are the timesheet and hourly charges. So these are different stages. First is research problem assessment and planning, for example. Now, if you keep looking at this line horizontally, you will notice that these numbers are set here. These are actually number of hours, okay, which pertain to research problem assessment and planning stage. At this stage, you could see that there is a separation of the staff levels. Staff level is to be is to be recognized and to be accepted as having the rates or the hourly cost to the client based on those expertise that they have. So let's suppose level one staff is actually defined, and that level one staff is engaged for 4 hours in the first phase, and level two staff spend 24 hours, level three staff, and so on. So these are all divided into level one, two, three, and four levels of staffing. Whereas I think the where is the rate? I think the highest level is L1, which is, expert level. So expert level is spent 4 hours. Then going down, you could see the next stage, which is research approach. We named it research approach. You could name it according to how you have uh, organized your, or you have phrased your next level of uh, research part. So part of your research planning. So research approach, meaning that we have defined the direction on how we intend to do the research. So at this stage, you could see that there was 20 hours applied because, a senior level or consultant or someone that is commanding a higher price on hourly basis is going to be engaged. So 20 hours here, and so it keeps adding. And if I want to look at the total number of hours that is spent in the second stage, is 45. In research design, it's 77. Data collection, 166, and so on. So total number of hours are 450. But you cannot just put one rate on 450 hours because of the level of experts or level of staff have different pricing. So let's now look at the columns. And in level one, you can see the level one staff was engaged with 126 hours spent, and the hourly rate is negotiated as $120 an hour. So the total cost to the client or the billing to the client for level one staff is 15,120. Same way, level two is 20,320, and so on. A total cost of 39,350, which is addition of 15,120 and everything that is on the right hand side. If it is all added, it will show a total of 39,350 that is billed. So this takes care of the hourly charges. Then we go down. There is an added cost which we call materials and direct overheads. So this is how we have defined our overheads. So anything that is already negotiated, discussed as allowable expenses or added costs to the project is described as online subscription, paid data, membership, this and that, whatever memberships to, I guess, any kind of registered databases, printing, stationery, out of pockets. That's just visually easy to understand. I don't have to explain each and every cost centers, but you can see that the hourly rates are separate on top, and then the added overheads are shown separately. Along with these, you're going to attach the supporting documents. So here you can see online subscription was $600, and you have attached expense schedule A. In the second one, paid data, you've added schedule 2. So the total cost now to the client, which is in addition to 39,350 for labor, the overhead costs would be 14,698. Together with 39,350, the total comes to 55,048. Uh, Sorry, this mouse is little bit jumpy. Okay. So now, and of course, at the very end, at the bottom, you're going to, adjust any pricing, whatever, advances. So the net is built 46,721. But the pattern or how you're going to be billing your client is shown for your information and for anyone who is going to go independent and start their own business. Perhaps best practice in billing is to make it more visibly clear and more detailed. This was a request for proposal. Now I want to get to the response to the proposal or response to the request for proposal. So this is actually coming from a real document. It is based on a proposal that was requested by a business or a company that is planning to launch a new product. And you could say that it is a pre-launch market research. That's what they are requesting. And what you would do is in response is to, uh, to put it put the put to inform the client about how you intend to tackle this research, what could be the different ways and methods through which you will proceed and complete the tasks. One of the things that you will mention before everything else, that is up till 5, is you're going to disclose the research team. You are going to also create a research timelines. You're going to do the cost of research, which is the cost of doing your research work. And this is what a lot of clients would look at first. There is a disclaimer and a non-disclosure. You do want to include a non-disclosure to give a level of assurance to the client that even before the client opens up and talks more about or details about the project, they would feel more comfortable, where you have inserted a small para that sort of gives a surety that anything coming to you will not be disclosed or will not be made public. So that is the other part. With how we are going to look at the research problem. First, hypothesis or the problem itself. The client is interested in investing its resources for it's a new product for men that contributes to concealing and covering men's baldness by applying an organic hair fiber solution, blah, blah, blah. Because you need to mention the product. You want to be more specific. It cannot be general. It has to be on the dot correct. And for the client to approve, it's being correct and accurate. So, a lot of times, what is not disclosed in request for proposal and information that you collected after, where before giving them the proposal, you understood exactly in detail what is required. You're going to articulate that information and put it in the best possible way, where you're not going to make it too wordy, you're not going to make it too concise, but accurate enough that it discloses the main elements or anything that would cause any kind of ambiguity will be eliminated and will not be something that will impact your judgment on making your costing or putting your cost of the project together. So that sort of clarity has to be there. As we understand, the client's primary research objective is to make a pre-launch decision of a hair simulation synthetic fiber spray that goes by the brand name. So you can be as specific as you want. And the objective is not too long or it is not as detailed, but it is precise enough, which you will observe in terms of how we have written it. You can see that in this regard, the client wants to outsource a comprehensive online market research. So you know that it is online market research. It is not something for which you have to do a lot of legwork. Okay, it says online market research that covers both qualitative and quantitative research concerning new products viability. Viability meaning that is acceptance by the consumer or its ability to be sold in the market. There is a need or there is a demand or there is a gap in the market. So a viability study. That is one objective. Then the second is optimized pricing. The client would want to know what could be the best price to sell this product, and also validate target consumer market and to figure out if the consumer or addressed consumer market has an interest, and that segment which is go to market um, um, users, they are looking for this product. So there has to be a two-way connection where the consumer market has to be validated in order to see if the product is sellable and the market is ready for it. That is the objective. So this is less elaborate, more concise, and reinforcing how client has expressed their interest in this research with the minimal wordings in. You haven't seen the request for proposal, but it is not as elaborate. Or it is, you could say that none of these wordings are used precisely, but you are sort of putting the words in their mouths, as they say, by re rewriting something that would connect with what their intention is for that research. So that's how you're going to connect with the objective. Because most of these requests that come to us, or from our experience, we have learned that it only depends on the client's expertise level or their understanding of how research takes place, um, which is what the request for proposal reflects, and so it can be written in so many different ways. And when you find that the client is not an expert or has limited knowledge of how research happens, then you do want to give or write your proposal in such a way that they understand, or uh, it uh, it creates a meeting of minds between both parties. So that is when you will actually start to write a little bit more than what is initially provided to you when you're responding. Online research work to cover the following objectives: product viability. Now, when you use these wordings, you have to explain them. What is product viability? What is optimized pricing? Validate target consumer. What does that entail? Then you've got research scope. So you're now opening up slowly whatever is first of all stated, and you're adding to it by creating a more like a research plan in sorts, where you are explaining how you would move and look for and maintain the objectivity of your research in planning your research. So research scope, for instance, based on RFP, the client has stated the scope. So you are basically rewriting what they wrote initially, what they're looking for. Okay. Things like the client will rely on data collection and data analysis as in quantitative research, as well as qualitative analysis of social media trends and behavior in the purchase of similar or comparable products in current online markets. So, to the extent where you have to fetch data from social media accounts, or anywhere where social media activity is mentioning about the need for the product, or the consumer market is identified for those social media accounts, you may want to collect the data, but not unlimited information, but limited to what is required for these type of analysis. Okay. The research will also determine product utilization by certain consumer groups and answer the questions such as what value the product brings to the consumer. Now, when we say this, not all information is available in the social media accounts. Even if you subscribe to their databases, which is a separate initiative by some of the larger platforms like LinkedIn and Facebook, they offer database and they offer higher level of analytics to subscribers or business accounts, but at a significantly high cost points. So even if you do get to that, you'd still find the void of certain information, like for instance, how much money are the consumers willing to pay? So those platforms would allow you to create a short survey using certain groups or target groups, um, or as special privileges. And I mean, like in business accounts, where you are a subscriber for added in for more information. Alternatively, you will have to conduct surveys, for example. So, reading between the lines, and when you're writing the proposal back to your client, you have already planned something which is sticking to your mind, and which is what is helping you to write your response carefully and covering all different grounds from the perspective of what is involved and the cost parts that would entail when you were approaching it, as you have described. So, product things to consumer would also mean surveys. You have to provision that, and that is cost. Um, Task will include, but may not be limited to, the following research methods. This is what the client wrote. They want these analysis done. But notice carefully when they write things like not limited to the following research methods, you will have to look at that this is statement carefully, and you have to tell the client that you want to be more precise and not leave anything that is open-ended, and therefore not be limited to should be the clause or the wordings that can be eliminated and can be negotiated. Then we've got research methods, like what are the research methods we're going to apply? Okay. Both in quantitative and qualitative research. Apparently, quantitative is like beating the same drum. Pretty much everything revolves around the type of data, which can be separated into these two different segments. Qualitative being more difficult, as I mentioned to you. Quantitative is slightly easier to obtain. In any case, what is important in research method is that you want to use some wordings which makes the client to get a quick understanding of what you mean. First of all, you want an awareness, so you've used the word. I mean, you can write it in 10 different ways, but this is the style we adopted and something that we wrote in our proposals, and that's why we are sharing it. But let's say awareness is a key word, and what awareness means, let the market know that the product exists. Okay, so we want, or the client wants to create that awareness. Second objective of applying research methods, when we say research methods, they have to be objective, they have to be consistently matched with mm, with the nature of research that requires those kind of methods to be applied. And therefore, it is important that you look at these wordings in that perspective as a consistent with the objective of the research. So, awareness first is that product exists because it's a new product, it's coming. Targeting, that is, reach the target segment with the highest online sales potential. Price determination, market analysis, yeah, product marketability, perform product analysis. So these are just some major um, points that you are basically reinforcing or you are repeating, so that it gets ingrained into the client's mind to know that you are going to be following these objectives. And then you will define the quantitative methods. Okay, quantitative methods in two ways. One is how you're going to collect the quantitative data. In doing so, what would be your primary source and your secondary sourcing? Data sourcing, quality of data, validation of data collection methodology has to be mutually agreed between you and the client so that the resources are not wasted and the client is satisfied and is willing to rely on that data. Therefore, everything that is to be mentioned in terms of primary and secondary sourcing is disclosed. This is what you're going to do. You're going to do surveys, you're going to do transaction logs, collect records or logs of system or website, product sales activity, etc. So I don't want to read all of these. This is for you to read and to keep as reference. My objective is to just give you an overview of how and when we are going to use our knowledge of what we have learned in the traditional research methods. That definitely becomes part of your not only proposal, but when you are creating your research reports, you're going to use those terms and you're going to have enough understanding to know how you would apply those terminologies in a systematic way. So you could see here we wrote approach to research. First, data collection. Okay. Primary source, secondary source. And then after you've done the data collection, the second part, what is the second part? Is analytics. What type of analysis you will be doing on this? And the type of analysis will depend on, again, what is expected outcome of those information sets. And therefore, you would use different methods to obtain those objectives or to reach to those objectives. There'll be surveys, descriptive research, correlational research. Uh, you don't have to know what correlational research is at this point, but what is explained here is there are other quantitative methods besides just the statistical methods that we did. And those are the ones that are mentioned here, like quasi-experimental research. Okay. Going down, once we have explained quantitative, then we also have to explain in the same way the qualitative methods, starting with the data collection, how we're going to do that. That is qualitative data. How are we going to, what type of analysis we will do in qualitative data as mentioned. Research team, okay. You're going to mention who is working with you, what type of resources you have, what expertise you have, things like that. Um, Another part, which is something that the client would look at more carefully and from which they will know how you intend to deliver the project in different phases or your research plan. That's what is explained in this chart. And this becomes part of your proposals. Okay. Timeline chart for research project deliverables. This is the easiest way to do it. People do it in different formats. They do it with timelines, they do it with the graphs and visual diagrams. But this is the simplest one that we have applied. You could see that, if you read through it, there is always a planning stage. After planning is approved and mutually agreed methods of doing research, you're going to then start the research by collection of information. So first thing you will do is collect the information. That would be phase two. Phase three is research and analytics. which could mean anything depending on the nature of the project. And then you're going to draft a report that's going to be phase uh, four. So there are four phases in which you will do or deliver your research. 14 days is the timeline for each individual phase. So altogether, you are going to put in 60 days of work or 2 months, um, or some, uh, so this is estimated. And there is no dollar amount mentioned here. What is mentioned in the deliverables is, bullet points, because you don't want to write like big long stories, especially in propose at the time of putting the proposal together. It's a lot of effort, and you don't want to make it too detailed, or the more you're going to put in the first layer or the first proposal, is going to impact anything that follows, or if there is a revision or something else that you have to do, it will be binding upon you to use the first proposal as something from which you don't want to deviate too much. So definitely you need to be very careful when you are putting the project deliverables. It is as if you are promising something, or you are agreeing that you will do something, in covering all these areas, which is going to stick for a very long time. So in any case, when we go to the next one, we are going to give them the actual cost of the project. So let's see what is the cost, or this is where you're going to tell them that the cost of the project would be 200,000 US dollars, for instance. So this is the total cost, and you have actually separated or given a cost in the true sense of the word cost. Cost is anything that is to you as a researcher, and price is what you bill. But anyway, people use this term interchangeably. So here, cost means the price or the billing amount. Let's look at the ways in which we can explain or separate the billing into two segments. One, we'd like to call direct labor cost or direct billing, anything that has to do with number of hours or the labor that's put in. So that is separated, or it is also called direct cost. So this direct cost right now is $114,500. Okay. Then you're going to add an element of overheads, which is, uh, overheads we can talk about later, which is going to cover the area of how the cost centers are distinguished. That we're going to discuss after this. So for now, just look at it from the point of view of how you're expressing it as part of your proposed cost of your project. So total 137,400. Now, under this, or starting from the variable cost down, you would see that the variable cost means anything that is going to vary based on the estimated fluctuation of how the work will be done, or what could be directly related to the work, but may not be predictable or may not be as predictable, but is based on estimates. So the cost would vary according to the different phases of research or different resource requirements and so on. So under the direct cost, this was all direct cost or direct labor cost. This was direct overheads. Now, after direct cost, there is variable cost. That's what I was explaining to you. So online research, research surveys, subscription, out of pocket, everything put together, the project cost, according to your best estimate, is going to be $200,000. Remember the clause I was talking about, the disclaimer and non-disclosure. So this disclaimer says that this document is a draft only proposal and provided to you as an offer in response. So you want to make clear that this is not the final price, or it is not the final program. or something that is open for negotiations, and therefore you may not be held liable to stick to the figures, especially which is changeable or which can be further negotiated. And then there is a clause of non-disclosure and anonymity. You know, if you put a statement like this one and sign it, it may be a good idea at the time of sending a proposal. I'm going to do market research agreement, and we will do the cost of the project in the next class on Friday, because I am not up to it right now, and few things that we'll discuss would already take about enough time. So let's look at market research agreement. Now, this agreement, you can, like I said, you can reproduce if you like. Uh, but because it is all legal language, and it's a legal language, so I'll just highlight some of the essentials which you should not ignore and put more emphasis on and put a lot of thought before you put these clauses. Compensation and reimbursement. Okay, this is a clause which would clarify the costing or how you're going to price the project. Okay, you have asked the client to agree to pay 30% of the estimated project cost in advance before the commencement of research project. This is also called mobilization advance. Now, keep in mind, there were these pricing models that I wanted to discuss earlier. Um, but since it is something that is coming up in this agreement, whenever we are asking for a client to pay some money in advance, uh, this is a kind of a method where you are doing, you're putting some money in a kind of a trust account, or you could say that it is an account which is used for billing purposes for you to get reimbursed through a guaranteed amount that is set aside um, as compensation. And the moment that you're going to send the bill to the client, they will have to release the funds out of this advanced or this fixed amounts that they put in that trust account. Now, this situation happens to protect the researcher in case the financial position of that company is not very strong, and they want guaranteed amount to be set aside so that at least their billing keeps getting paid on time. Plus, there is an assurance that as soon as the amount becomes low, or let's say a fixed amount that is always supposed to be there as in escrow account, um, so that amount will have to remain intact. Even if the money is released, then more money has to be put back in so that that fixed amount will remain the same as an assurance that this amount is set aside for your services. So, in that kind of pricing model, you would use mobilization advance or something like 30% outright. And then you can also demand for the client to open up an escrow separately and put fixed amount in there, which can be used against the bills or paid from that, their bills can be paid from that amount. Okay. So that is important. Then here the incidental research expenses, IRE, and research data procurement cost is clearly stated, which will be considered out of pocket. So you want to make that amount to be paid or reimbursed separate, as if it is incidental expenses not related to direct cost of service, but are involved as a cost that is not only unpredictable, but it is inevitable. That's going to be there. And you are making a provision and agreeing with the client that such and such costs will be considered the incidental research expenses. What are those? Will be part of the attached, maybe annexure or something like that. Second thing is that you want to make sure that your status with the client from the legal perspective, and from the relationship perspective is not that of an employee and an employer. And there is strict regulations for the from the labor law, especially in North America, that creates or makes a distinction uh, for the employee and employer relationship to be binding because of how you interact with each other, versus a contractor and a contractee relationship, which is separate from the labor law, and another law is applicable, which is a contract law, or anything that is not truly giving privileges or at the same time any liability or any mutual obligation as employee and employer. So that status has to be clarified, and this is a very important clause. Because you see, if you're going to use client's premises to sit there, you coming on time, leaving on time that you've agreed on, and you're using their facility, utilities, even their staff, then there is a gray area, all right, that you don't want to become entangled into that situation. Um, there is indemnification, indemnifies somebody, indemnifies from liability. So if you're a contractor, certain things, certain privileges, certain obligations that you are asking the client to protect you from, or based on what is expected from you with involvement with the client, would surely differentiate you from an employee, and therefore as a contractor, any information or any use of or any interaction with the client would not make you liable to any kind of lawsuits or legal proceedings. Intellectual property, this is a clause where you would want to make sure, or even for the client. Now, there are two kinds of contracts. Fundamentally speaking, whenever we look at the contract, we like to see that the contract is fair. Number one, fairness. Number two is legal. It is legally enforceable or not. And number three is it does not contradict, or it does not do provide any clause that is illegal clause. Okay. So those elements have to be very clear. But between three of these, what really prevails, or what really you would look for, is a contract that is balanced enough that it would benefit or protect the rights of both parties. So it is a mutually agreeable contract. It's a friendly contract. It is actually doable contract. You're not only protecting yourself, but also giving assurance to the client that you're aware of their rights and um, you know, their rights basically, and you're accountable for things as well, just the same as the client is accountable to you. So a mutually agreeable contract is what you should be looking at. When you look at clauses like intellectual property, literally this is for the safeguard of the client, not for you, but for the client. So this clause takes care of the intellectual property that is handed over to you during your research between the client, for the client to hand over to you from their own internal resources. And therefore, there is a certain level of surety as well as the obligation to, protect their intellectual property. Confidential information, remember the NDA clause we put in there. Now, this becomes more elaborate and it is talking about what is considered as confidential information. Again, from the perspective of the client to give them assurance and for you to give the client enough confidence that you will keep the research private. And so it continues. And let's see what else we have. Termination of the contract is also as important as, putting in the period of the contract and where, the certain rights and obligations are there. There is a right for termination under certain conditions. And contract is not actually put together in order for it to be broken. The idea of termination here is that as long as the obligation of both parties are met and there is an element of fairness and all the legalities that make the contract are respected and obligated, there should be no need for termination of the contract before the maturity. But the clause has to be there in case there are some breach in what I just explained to you. Term of the contract is important, like how long. So the term, when you describe the term, you can refer to, the timeline that you have agreed with the client when you're going to finish the contract or when you're going to, deliver things. If the deliverables are not produced on time, even that could be one of the factors that would result in termination of the contract. Is a disclaimer not important as much? Okay. Anyway, um, so that's pretty much the documents that we have discussed today. Um, I want you to know that the next time when I see you, I'm going to teach you how to work out the minimum cost or the labor cost using some of the cost points which needs not be ignored and which should be built into the labor cost or hourly rates that you want to keep as your minimum threshold, where you don't want to go lower than that specific value. Because a lot of times you are just trying to get a good reference, or you want to offer cheaper services because your competitor is offering it cheaper than yourself. So you can, there could be several reasons where you would go below certain value or certain pricing. But just to be cautious and just to know where you're heading with the rate, you will need to look at calculation of figuring out what is the minimum rate that you should not go below in order for you to sustain not only as a business, but also as making money out of that research work, right? So these are the two things. We are going to do project estimates and budgeted rates per hour. What are the different costs that you should not ignore, or typically what are the cost centers that are explained here 1 through 20 that are usually part of your research business, typically for independent consulting work, and the calculations of how you're going to um, you know put together the minimum price that you will charge. So we will see how we come up with $85 per hour as the cost or the true cost, and whereas $105 is a safeguard or a buffered cost on hourly basis that would give you a marginal profit, and therefore that marginal profit is the intended buffer that protects you from going into losses. So these two pages are left. Everything else we have finished here. And the last thing is the costing or the pricing methods. These are explained on page 391, starting, in fact, page 392. There is fixed price method, which is project based usually. There is time and material, which we call cost plus. I've explained a little bit of this already. Risk and rewards. Remember, I told you for a startup with bootstrapped kind of companies, you may offer them service based on risk and reward method. There is retainer based when we say that put so much money in the escrow as a guarantee for funds to be available for bills to be paid. You're talking about retainer based pricing. So these are the ones that we will explain slightly more. Is nothing complicated in these, except that these methods are understood, widely understood as acceptable methods that you can apply. Sometimes you can apply mixed of pricing methods. So fixed price, time and material cost plus risk and reward retainer based, four of them. So this plus costing sheets is what I'll cover. And right after that, I'm hoping that I can start with internet law. And by the way, this would have concluded everything in module 3 of our CIRS course. And that would leave us with internet law, and that would be two additional classes or two more classes. So because we got a little bit off the track because I missed a few classes, so I have to add them to the schedule, which means the last class, which is due to end on 8th, coming next class, what, 8 this week, we would also have to have two more classes, additional classes on what, 9th, 10th, on 11th and 13th. So two more classes I will add, one of which, or an additional class if you request, we can do for just doing some practice Q&As using the sample exams, and then just give you an overview of how to approach the exam. And Majdi has had an experience, is fresh in his mind. So maybe he can also help us and share his experience. So,
Sure.
any question? Anything I can answer for anyone?
Yeah, so it sounds like the business of research to a certain extent is relative. What I mean by that, it's relative to the expertise of the researcher and relative to how much the client knows about research, right?
Yeah, for the segment we covered right now.
So my question is, I guess that's where the margin of error comes in. Like when you're doing all this research, there's a margin of error, and what's built into that is how good is the researcher, and if the client doesn't know a lot about research, then that's good for the researcher to a certain extent, right?
Yeah, but problem comes towards the end because it's a service business. You don't want any disputes, you don't want any headaches. It's not like any product. Unfortunately, it's one of those things that I can tell from my experience that you don't want to land into a dispute towards the very end when the money needs to be paid, or for you to have a client that is non-cooperative on account of being ignorant, for instance. That might be something that you probably want to take an extra step to educate the client so that the client is well informed as to how you're going to proceed, what would be the expectations or deliverables that might be an added effort for you. It's just nature of these kind of businesses.
Well,
Um,
I think what I'm trying to say is like, so let's say I'm a very good researcher on a scale from 1 to 10. I'm a 10 level researcher. And let's say the client's knowledge of research is at a level 7. And let's say I do
yeah,
the research for this client, knowing within myself and with my team, we could have done a better job. However, the client is pleased with, I'm not talking about in the situation about disputes. I'm just talking about the quality of the
sorry.
research can
Mhm.
potentially be, the quality of the research is relative to a certain extent. It's dependent on how good the researcher is and how much the client knows about the research. That's what I'm.
Yes, and you're right. You just answered exactly how I would have put it. It's the mutual knowledge or the knowledge. I mean, um, of course, everything is relative. Thing is that the client has to be knowledgeable enough to respect what you're doing and would have some sense of understanding the value for their money, which is what you are trying to deliver by being, more professional and, covering all different aspects of your research work. Uh, Whether the client appreciates it or not would again depend on their knowledge and their understanding, their appreciation, and their respect for your work. So everything is relative, and life is it's like a two-way street, right? Thing
Right.
is that we've had clients, or I could say, the clients can get unreasonable sometimes. They can even be unappreciative by just not, um, you know, um, not understanding the depth of research that you need to do for even for smallest data that you need to collect at times. Certain large information or certain more complex information are easily available, or they pop up somewhere and you can get to it. And sometimes even simplest information is difficult to get to. For example, I was looking for a historical data of how the bandwidth cost is reduced over the past 10 years. Um, that is the cost of bandwidth to the consumer. And I couldn't get that data. It sounded very easy. It sounded like there would be some facts available, some statistical information. But guess what happens when you try to look for it? There is technologies that have different costs, and even though they're bandwidth related, like ISDN at a different pricing, and these are the circuits. Remember ISDN, DSL that was there
Right.
before, and so on. So there are different prices, and they're so difficult to first of all to um, find information in the proper breakdown of how these technologies prices have evolved over the period. And so the commitment was made, and now I'm like 20 some odd hours over and still haven't found enough that I can, put together. So there would be these things, and if the client is non-cooperative, or if my client would not understand this reason for the project not getting done on time, then of course it is loss for both parties, because now you have a client that is not appreciating or not understanding your set of issues. And at the same time, research is such that it requires flexibility. Inherently, it has a nature which demands flexibility and would require an understanding of timelines to go beyond uh, you know certain estimates. It's all based on what information is available. If the information is not there, research is irrelevant. If I cannot find something, do you think it is my fault? Or if it is something for which client is not willing to pay for it? Maybe there are certain databases that you need to, buy the reports. Like, take an example of IDC or Forrester Research. Each one of their research reports are what, in tens of thousands of dollars, maybe 20, 25,000. That's where it starts. Just maybe like 20, 30 pages of it. So, it's just understanding and respect of the profession and the intricacies of, you know, um, research work itself. So, I'd say that this is a give and take. This is a compromise on for both parties. All right.
Yeah. Okay. Thank you.
So good enough. Thank you. I appreciate everybody being here. Romy, Anthony, Majdi, and Joanne. Hope to see you day after. And that's our
All
next
right.
class. Thanks. Take care now.
All right,
Good
you too.
evening, good morning to everyone.
All right. Thank you.
Thank you.